All right, it's Sunday, 11 something, but we're just gonna look and see what we expect in the coming weeks. Yeah, so right, but basically, right, looking from a monthly, um, excuse me. Okay, so I mean, this is the matter of fact. Let me just go to the ES. Yeah, let me just do that. So obviously, monthly breaker here. We had the automated retrace and we had the actual retrace, and now we're running lower. Um, this seems to be a mode of it's trying to expand lower now, right? So monthly, I mean, I wish we started doing these analysis way back because we already were looking at all these type of levels. But this area right here, uh, yeah. So I'm looking here, then obviously into this order block range here, this small gap here. That's another area. So this right there. Um, and seeing if we continue breaking structure, like I think we're gonna break structure, and here, you know, and this would be down into this breaker area, this up close kind of area, would be down into this breaker range, and these three monthly. So these two are an order block, and then these three are an order block. So that would be down into um, the supposed discount range of the monthly, because the low form here. And then the high formed here. Yeah, so the high form here. So you see, technically, we're still in a premium of the monthly. On the monthly, we're still technically in a premium using this dealing range low to this dealing range high. Discount doesn't come into effect until this loads at this breaker. Um, but even though we have all these up close candles acting as a breaker, because I have this one, but the fact that it's all these consistent ones, I'm sure you could look at it. From like this range here, and then any one of in this breaker range, just sweeping this low in this breaker might not be enough. It might be that price seeks out all of these lows, in this range. It might look to sweep these three consecutive lows in here before it finds a way. After if we get up here, and then if the breaker's not gonna hold, then it's obviously gonna come for this. So honestly speaking, I think this low here in this area, this might be as low as we go. But if there is some form of, if we get on here, the structure on here is not looking bullish, then I wouldn't be opposed to sweeping the already swept area here. So I don't know, but given the fact that this dealing range is a This is like a couple thousand points, I think. Yeah, this is a 2600 point range. 2600 points. So a lot can happen in these ranges. But forgetting all of these on here, still looking at um, premium liquidity. This 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 these equal lows and they just gap. Because so far September has had a range of 7%. Taking out these lows would be another, or taking out the previous monthly low would put us at 10%. Taking out these lows would put us at 13%. Taking out the gap would put us at 15%. So low ball for September, I'm looking for us to take out this low, the previous monthly low. So low ball, I'm looking at, let me actually just right there. Yeah, hold on. Let me do it like this. Okay. So this first range is 10%. $41.75. All right. Okay. So initial is 10%. That's the low ball for September. Medium would be taking these out to put us at 13%. 13%. In the middle, bro. Come on. One, two, three, four. One, two. From here, one, two, three. From here, one, two, three. All right. And then this one, let me make sure they're all. No, that's too high. 175. And then that's 175. And then this is 01750. 3631. Alright. I like the numbers to be exact, man. We gotta be exact. And the bottom of this gap is 3541 flat. Big figure. 3541 flat. That's 15%. Alright, so let me make this one. Let's make you this color. And then try and make that this or the same. Yeah, I'll make it a lighter shade and then a darker shade. So then this would be yellow. This would be a lighter yellow, like yeah, like that kind of yellow. And the text is just say that's the same. This and then 15% being the bottom of that gap, and that would be just being like a, and then this color being bam red. So we either have a 10% month, um, so it's either 10%, 13%, or 15%. So at least that's what I'm factoring here. Now, super, actually, I'm not even gonna do that. But we have this, and then potentially a run to equilibrium. We could just say that price is gonna make a move to where equilibrium is at, and that's only one more percent. So I'm either seeing a 10% down month, 13%, or 15% for September. That's what we're thinking from our analysis. Um, Make sure this stays only on the monthly. Right, so that's what I'm looking at. The liquidity areas. This low, these lows, or this gap. Um, any lower than that is bruh. So that's what we're looking at on a monthly, right? Now back to this. Weekly, you know, um, since we drew up into this gap this week and now we're expanding lower, obviously the next target are these um, relatively equal weekly lows, more so the lowest low. So this low again, yeah. So this low. So as the week plays out, this is what I'm looking for us to target as we move lower, right? Because this breaker being here doesn't really, we're not really looking at this anymore. This wasn't a breaking market structure. This was simply just a turtle soup, a run on liquidity targeting these. So this is the target that we have for the week. And we do this, yeah. Yeah, so our weekly target are these lows right here. We're taking out this low. Um, Also this. So weekly target is what I want to target, and that's about what, that's 140 something points. So that's another 4% down to take that out. Um, and then this target is also another one, but the initial weekly target I have is this. Once you take this out, then whatever else comes will be like runners or whatever. But this is 6% down. This would be another 6%. So I'll have that as so yeah, weekly target. This is like runners or whatever external because this would be the bottom of the range that we made so far for this year. So if you take this out, and if we take this low out and close below, then I'm looking at this whole week as a breaker, right? If we take this low out, I'll look for this whole what 6% candle week to be a breaker because we'd have a high, a low, a higher high, not just a higher high, but a higher high that ran stops and liquidity, and then a lower low. So if we close below this week, this is a weekly breaker. This would be um, an area of a point of interest or a POI, right? So that's the thought that we have on that. I'm gonna keep these on the week. Yeah, keep these on the week. So yeah. Now daily, obviously this is the same weekly target, and this is the same external liquidity target. So these are the same targets here. These are the same. Seeing as how we came down into this daily bullish OB and had some form of bullish reaction, I think this would be another scenario of what we've been doing, right? Which is, we shift market structure. Now we're on the sell side of the sell model. We set a low, we go up, we take the low. We set a low, we come up, we take the low. So I think this candle is probably going to act as like what this candle and this candle was. A swing low for us to retrace into. Um, Now, liquidity in that area is obviously this void right here, this opening gap here. Um, I think we could look at this candle here. I think we can mark this off as a bearish order block. Yes, I think we can mark this off as a bearish order block here. Let me change the yeah, okay, I think that's better. So we have the bearish order block here, potentially up close candle, the price expanding lower that created a gap. So technically there's two gaps here, right? We have this volume imbalance, right? This void of liquidity, and then we have this gap here on the daily. So I'm gonna just put that in the front just so we know. So we have these two gaps here. We gotta plug it in. All right, there you go. Okay, so we have these two gaps here. We have this gap here, and then this fair value gap here, and then this bearish order block. We don't necessarily have a swing high form on the daily just because of like how large this candle was, and I'm not really looking for this candle to be like this huge gap to be revisited. I don't think. I mean, I'll expect it, but I don't think this huge area will be revisited. Um, Simply because like it is a strong downward candle, but it's not really a strong downward candle that is like abject of liquidity, because we did have some form of delivery upwards before. Like it wasn't something that was just like we were just like la 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 chilling chilling chilling, and then did this, right? That would make this from this low to whatever short-term high we make. That would make this range, I think, like the range from here to here. That would be, I think, an area of inefficiency because there was no delivery here, right? So, whereas this was more of a, we did this, we came down, we went up, and then we went down, right? So I would kind of look at like not this whole down, which would be this. I think it would just mostly be to look from here to here. I think from below this low and down, I think that would be the area that we seek to rebalance, and not necessarily rebalancing this. This might come back into play as like a form of liquidity on an uptrend, right? I would think, but it is FOMC next week, so we have to permit um the idea of price trading up into this gap, because this gap is like 200 points or something. Oh, excuse me, it's only 99 points. It looked bigger than it was, but it's still a 2% gap, right? So I think that's the difference I'm seeing here. Like if it was this, then I would expect price to have some kind of push up into it. But because it was this, I don't think price is looking to seek out all of this. So we'll see how this plays out in hindsight. I mean, from when we talked about this, we'll see how that plays out. Okay, so we have these two gaps. We have what I potentially have labeled as an order block. Not entirely sure, but potentially. Um, Came down into this daily order block. Um, so now we also have something where I think, right, or I would with confidence say that we have um, an example of what we were looking at on the weekly, right? Because how we were saying on the weekly that we want to see, or that we expect to see, this high, this low, a higher high, and then a potential lower low closing below this, and this acts as a breaker, right? But if we go on a daily, we basically have that now, like in play. And I'm looking at, well, technically I'll look at these two down close, like I'll look at the body range of these two down close, but I'll focus initially on this first candle, especially the body of it, right? Because we had some form of swing high that rebalanced the gap, right? So we had this swing high, right? So we had this swing high in the gap. Then we had these equal highs here. So we had this high. Um, Let me just make it black. We had this high, and then we had these highs, right? We had this high and these highs. And we set a low, and then this rally, this aggressive rally upwards, took out these highs. Then we ran down, and then this day closed down here. So we closed below this low that we formed. So we have short-term highs in here that were ran out, and then we have a closure below. So I'm looking, well, you could look for the entire range of this. Yeah, you could look. I did the same thing again. Okay, let me just change it to this. Thank you. So you could look from the entire range of this, and that would encompass kind of all of the latter of last week's price action. But I would more so refine it to this, right? And when I do that, it kind of makes a little bit more sense for what I expect to happen in the week. So I don't expect us to come back up into this gap. If it does, cool. It might be, if it comes into this gap, it might be another situation of this, because this structure right now is bearish to me, right? Then the next daily swing high we have to take out is this, and then any aggressive runs above any of these daily highs, because it's not always a swing high that has to be taken for a break in market structure. Like this, the fact that this was supposed to be quote unquote a bullish trend, and we're supposed to be setting higher lows, right? Higher low, higher low. But then this candle took all those lows out. This is a break in market structure right here. So I'm not expecting this area to be revisited. If it is, it'll probably be something like um, what this was, which is a push in, but then a closure below. So yeah, unless you have like crazy bullish move. If we close above this gap, then I would probably start looking for, okay, maybe we're probably trying to run this high again, but I'm not expecting that. So focusing on this area here, I'm looking at this precise area. You could also look at this area. This area encompasses this gap, this order block, and this gap. So if you use these two candles, then you would look for it to come up to this gap. But if you use just this, then you're looking for it to stay in this area before going lower. So basically, we want to see up here, somewhere in this range here, either in this gap or in breaker, or potential order block, and yada yada yada. And then below this low, right? Initial target would be this low. Then I will look for to see if we take this low, and then it has a fair value gap down here. So watching that as well as a potential draw on draw of liquidity. So I'm not even gonna label that as a gap. I'm gonna just label this as these gray lines. Yeah, if it comes up there, cool. But I don't know. But I'm looking to see how prices react to this potential breaker that we have, because I would say I would count that as a breaker, because this high and low and then the higher high part ran liquidity. Like there was definitely people that had stops above here. So that's really, I'm just looking at this kind of condensed range of price, and what could potentially come from that. So there, so again, this low, I want to see targeted, and then down into this gap, and then really just to push below and take this low up, because down here, especially, are wicks, right? A lot of this price action is wicks, 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 wicks. And wicks have little volume compared to the bodies of the candle. Most of the volume is in the bodies of the candle. Wicks are more like the manipulation ranges. So they run and clean people out. So there's not much liquidity in wicks. So if we do take this low and then this gap, I expect to see it like accelerate heavy, basically from the range from this gap down. So I expect to see like a kind of like a 2%, about around 80 point, just price accelerating, like kind of like how it did with this candle here. Like it was like no, like it took 4 days. It took 4 days to run 238 points, and one candle was able to move 240 points. So it took 4 days to run from the lowest low to the highest high. It took 4 days to run 238 points. and in one day it took 240 points. So I don't think it'd be as far fetched to think that we could see that happen again in this um 80 point, yeah, around 80 point range, if not lower, because the collection of wicks are here, but then there's also this area here. So I'll mark that off too. Yeah. So yeah, this whole area is what I'm looking at here, because I'm just seeing that maybe price might use this order block as a way to retrace into this area before heading lower, because we've seen that happen a couple times, right? Because we went up, we came down, retrace, oh, bullish order block, oh, yoink, and it's gone. We came down into this area, these two down closes. I feel like you could say these are order blocks, I think. Not entirely sure, but the fact that, I mean, you could also see the reaction to this area here, so you could count that too. Up and then down, so I think it's the same thing. I think it's the same thing happening here. Only deterrent is FOMC, right? Because this week is FOMC news week, but that starts Wednesday. That starts Wednesday at 2 p.m. So we have roughly, not roughly, we have 2 days, Monday, Tuesday, of no real high impact news to have some form of manipulation um potentially up into these areas. And then Wednesday, Thursday, and Friday are all high impact FOMC Powell news. So Monday, Tuesday setup, and then Wednesday to Friday delivery. Um, that doesn't sound too far fetched to me. We've seen that happen like a billion times by now. So yeah, that's what we're expecting on the daily and the daily. Now hourlies per se. Let's look at the 8 hour. I like the 8 hour. P-Dub introduced us to this time frame, but using I realized like he's not using like weird time frames that are like, I don't know, like the 7 minute or the the 13 minute, or like, because technically you can trade those, but he's not using those. Like he's not really looking at those areas. And I was thinking more of like, since price is fractal, um, a simple fractal is kind of is the idea of dividing, repeating over and over and over. So I'm like, if price is fractal, then we should probably stick to like kind of prime number, even number time frames, to like twos, fours, eights, tens, stuff like that. So I have the 8 hour, which is pretty close to the daily in terms of um in terms of price action. So this is the same giant gap that I don't think we're gonna revisit. And then this is the area that I think we're going to linger in. And the breaker is also clear. It's actually a bit clearer on the 8 hour, right? Because we have this high, and we have this low, and we have this higher high, and we have this lower low with the close. And we retraced up into the range of it. But I would look at these three consecutive down candles as the breaker. I mean, yes, it can be labeled as the lowest body close candle, and you could look at that one. But when there's consecutive things, just like order blocks, you kind of count them all as one candle, and then specifically the bodies. I don't really focus on the wicks. But you see now on the 8 hour, we have some form of structure above here. You could see this as buy sell liquidity, so that's what I'm saying. Where the daily could potentially, I mean, we could potentially push up into this area just because of the stops here. But I wouldn't really look at that as a breaking market structure, in my opinion. If we do, but you have this breaker range. And then you have, this is that daily gap, so I think we're gonna move that back to the daily. And then you have the same setup again, the same fair value gap. It's not letting me. Come on, change. It's not changing. Come on. Oh, okay, our Wi-Fi is bugging. All right, so I'm not gonna draw it, but you can see the fair value gap right here, and then we also do have that same daily gap, that volume imbalance. So I'd want to look into the range of that, and I'm assuming if we draw the 50%, it probably lies somewhere here, right? And then on the 8 hour, even more, we have this that last day's push. What did we leave? Equal lows. So like it's making sense to me why. Um, yeah. See, so 50% of the range that we set, right? So the range of the breaker basically lies right above the 50. So I'll be comfortable shorting in this range, and then even more specifically, um, Jesus Christ, this is annoying me. Thank you. Even more so, um, above the 50 in this gap. So that basically puts it to a what 20 something point range. So yeah, that's what I'm expecting to form on a week. And then low hanging fruit would obviously be these relatively equal lows. They're like 3 ticks off from each other, but it would be these. These would be the main focuses for what we're looking at. So yeah, I don't think I have to refine it anymore. You know, you can, but the monthly, weekly, daily, 8 hour, that's fine. And then if anything, you could look for like lower time frame, 15, 5 minute sell model, right? Because bearish, what is it? High time frame bearish retraces are low time frame sell models. Because high time frame is down, up, down, and a sell model would be up to down. So yeah, that's it. I don't want to continue rambling um, too much, but that's what we're looking for to form in this upcoming week. But it's FOMC, so a lot can happen. This is the things I'm looking at, but I am not dead strong and it has to be this. No, but I highly expect slash anticipate it. Um, yeah, so that's it. That is it.